And then the bull market's when the number is going up and Bitcoin is going up in an exponential manner. That's when people are like, oh my gosh, like I don't know what this is. I've heard people talking about it. I need to learn more about it. They listen to a podcast. They listen to Michael Saylor. They're like, oh my gosh, like this might actually be digital gold. Wait, actually, this might be the best money that humans have ever discovered. I need an allocation to it.
Start mining Bitcoin today at marketplace.blockwaresolutions.com.
Joe, it is generally understood that holding cash is a terrible idea because of inflation and that preserving or building wealth requires holding assets. Why is it better to hold Bitcoin versus stocks or other forms of equity?
Yeah, it's a great, deep question. And it definitely stumps a lot of people, I feel like, at first, because I think, like, in modern finance or even just your average everyday person who works a normal 9 to 5 job, everyone is kind of like converged on the idea of long-term savings should be in like the S&P 500, whether that's like VOO, like Vanguard's passive index fund for the S&P 500, or SPY, or something else. That seems to be like the intellectual way to currently save, hundreds of thousands, millions of dollars for your long-term future, like in your typical 401k. And I think that that was correct before Bitcoin, but now that Bitcoin exists, I think that's an incorrect way to go about saving for the future on a very long time horizon. One thing to think about when you're saving in the S&P 500 is like you're buying a lot of losers, right? Like I think if you look back 50 years ago, like in 1970 or 54 years ago, I saw a fact the other day that showed 86% or around 80%, 6% of the companies in the S&P 500 in 1970 are not in the S&P 500 today. Like they disappeared or something happened to them. So if you're buying the S&P 500 and you're holding it for a very long time, you're obviously going to have a small amount of winners that win really big, but then you're also going to be buying a lot of losers that inevitably just go to zero. And obviously, the whole point of the passive index fund is to rebalance and, sell the losers, buy the winners. So you end up doing, over a very long time horizon, better than just holding, dollars. But you don't, it would be a lot better if you picked the actual winners and rode the winners. And so historically, when you look back at the performance of the S&P 500, you'll see that annually it earns, maybe over the last 50 years or so, maybe around 8% per year. But if you also look at M3, which is like a measure for total dollars in the credit system, the dollar system, that's also growing at about 8% per year. So really with the S&P 500, you're actually just kind of tracking the total money supply. And, that's, not ideal when you can literally now Bitcoin exists. The supply of Bitcoin doesn't grow, or currently it grows in a very, very slow rate, and eventually it will be zero. And so if you're just tracking the money supply with the S&P 500, then with Bitcoin, you're locking in your percentage of the money supply. And so I think that that's going to be the way that people look about it. And then obviously on top of that, you have adoption and unadoption of different monies. Obviously, people are slowly unadopting quote unquote dollars as savings technology, like moving money out of cash and long duration bonds into things like the S&P 500 and into Bitcoin. And then Bitcoin, I would argue that adoption is growing very rapidly over the last 15 years, and it will probably continue growing very rapidly over the next 15 years. And so not only is Bitcoin a perfectly fixed supply in comparison to the US dollar, but it also has that increasing adoption wave to where, okay, if the S&P 500 is matching the annual supply growth rate of dollars, and Bitcoin kind of has no growth rate, so maybe Bitcoin would do the same as the S&P 500. But then you have to add on the fact that Bitcoin adoption is growing massively, and so there's reason to believe that Bitcoin has, obviously outperformed the S&P 500, but it will probably likely continue to outperform the S&P 500. And then also you're getting exposure to Bitcoin without, Bitcoin has no counterparty risk. It has no dilution risk. It has no execution risk. Like it just works. Whereas when you buy companies and equity, then there's a lot of execution risk and there's a lot of regulation risk. So I think in the long run, Bitcoin will probably be the best way to save for your long-term future.
Yeah, I think for me, the point you made about the M3 money supply in the S&P 500 increasing by roughly the same amount every year. That was one of the key tipping points for me when it came to understanding Bitcoin, because you're not getting any wealthier when you hold the S&P 500. You're literally just maintaining with the supply of dollars, right? You're not actually gaining a higher percentage of the total dollars out there. What do you think would happen to Bitcoin? And I guess we kind of know what would happen to Bitcoin if Bitcoin exposed equities like MicroStrategy work their way into the S&P 500. But what's your sort of timeline? Do you expect that to happen over the next decade, where we have all this passive inflows into the S&P 500, just almost brain dead allocation of people into their 401ks? At what point do you expect Bitcoin to kind of sneak its way into those passive flows?
Yeah, that's a great question. To some extent, it's kind of already happened at a very very small amount, right? Like you have Square or Block now in the S&P 500. They own a very small amount of Bitcoin. You also have Tesla, who owns, or at least did own, I think they still own a little bit of Bitcoin there, I believe, in the S&P 500. So it's happening at a small amount. Obviously, MicroStrategy takes that to the next level where they are full on adopting a dedicated Bitcoin strategy where they're actually like trying to accumulate more Bitcoin per share for their shareholders. And I think eventually MicroStrategy, probably will get added to the S&P 500. From my understanding, there are certain requirements that are kind of like written out, where it shows that companies that are added, or the requirements to be added into the S&P 500 are something like you have to be profitable for 4 straight quarters, you have to have a market cap above a certain height to show that it's a real company. And then I think a third, or one of the last requirements is like it has to be reviewed by the S&P committee, and then they have to like manually accept it into the S&P 500. And I guess there would be a question on MicroStrategy, because I mean, obviously MicroStrategy is a very unique company in the sense that almost, from my understanding, every company in the S&P 500 is not just like, holding Bitcoin or holding a specific asset. Like they're not a real estate company. They're not like a gold company where they just buy and hold gold. They're all like companies that are trying to like maximize their profits and reinvest into their company and grow like the actual business. Whereas MicroStrategy is more of like almost like a hedge fund type thing where they're doing some sort of like financial engineering on top of their very small operating business that they have, which is obviously a software company. And so I think, from my understanding, MicroStrategy will probably soon, if not already, qualify for inclusion in the S&P 500. But there's still that question mark of, will the committee approve MicroStrategy getting added, and hopefully they will, and I definitely think they should. But it's it's an uncertainty in the future. But I do think it would be a very big deal, because like we're talking about, most people today save wealth in the S&P 500. Like that's how the world saves wealth. And that's going back to kind of your first question, you know people chose the US large cap equity market as their long-term savings technology. And that's not even like just people in the United States. That's people in Japan, that's people in Switzerland, that's people all over the world. And we just, happen to converge on the US equity market because the strongest economy in the world, dollar is the world reserve currency. And so like these companies ended up just becoming the largest companies pretty much in the world. And it's possible that in the future that maybe we, like, the Japanese stock market gets very big, or the European stock market gets very big. Maybe the US isn't the default savings place for the world's wealth. But yeah, I think MicroStrategy probably, or I hope, will eventually get added, and then all of these passive flows will be like indirectly chasing Bitcoin, and Bitcoin effectively would end up in everyone's portfolio, whether they really care about it or not.
Yeah. Well, knowing how these kind of suits and large financial institutions are, I think it may be a while, when you explain the process there of the Standard and Poor's committee actually having to manually approve it. I could see a world where they just refuse to, even if it makes like abundantly clear sense to Bitcoiners that, yeah, MicroStrategy should be in a balanced portfolio. And you brought up a good point about MicroStrategy being not necessarily like an operating business, which they are, but they're they're almost a Bitcoin ETF in a sense. They operate like a hedge fund. And to me, that's very indicative of one of the problems with fiat money, because in a perfect sound monetary system world, MicroStrategy could fully focus on their main core business operations. Instead, they have to also act like a hedge fund on the side just to merely preserve the purchasing power on their treasury. So I hopefully in a Bitcoin standard that won't be the case, and companies can actually really focus on what they do best rather than just preserving the money they've already made.
Yeah, for sure. I mean, in a perfect world, or in a world where Bitcoin is like the world currency, um, there wouldn't really be any financial engineering to uh, just kind of like play fiat games and outperform holding cold storage Bitcoin potentially. So, that's very, very far away, and I don't know when that would come, if ever. But it is kind of interesting. Yeah, I mean, in a on a Bitcoin standard, there won't really be rent seeking abilities. Like, you'll actually have to produce real value for consumers or for businesses, and you'll have to do it at a cheap, effective manner. And that's how you generate profits. So yeah, I think that
Right.
Bitcoin kind of kills rent seeking.
You talk about technologically induced deflation a lot in your content, and most people outside of Bitcoin, they don't really understand this concept, or they've never even thought of it because prices are always going up in dollar terms. So, can you kind of give a high level breakdown of deflation? What are the consequences, and how does it even happen?
Yeah, definitely. Um, so I think there's kind of like two aspects to this concept of deflation, because you'll hear like Keynesian economists talk about how deflation is terrible for society and for the financial system in general. And I think when they have their unique perspective of viewing everything from the lens of today's system, I think they're actually probably correct, in the sense that if you let deflation really unravel, and you let, you know, unemployment spike, and you let people that borrowed a bunch of money default, and the lender of last resort effectively disappeared, then there's deflation in the sense that all of these the bonds and the debt that's out there in the current system, that starts to kind of evaporate. And with fiat money, our money itself is debt, and so money actually kind of disappears from the system. Like, you'll hear, the ETH narrative of ultrasound money, where the monetary supply is decreasing. If you kind of let deflation completely unwind, then the dollar, at least very temporarily, kind of becomes deflationary ultrasound money, because the supply starts to just naturally disappear. And of course, that's when we have the Fed come in, or the government come in, print a bunch of money effectively, and drive, get people borrowing money again, get asset prices going up again, and get the system churning. So I think that a lot of people view deflation from that lens, and that confuses a lot of people, thinking it's a very bad thing. But then we also have like natural free market based technology deflation, which more kind of applies to like basic consumer goods, where it's like, yeah, you could have bought a hard drive that had 1 gigabyte in the year 2000 for $1,000, and now it's like you can log on an Amazon, buy a 3 gigabyte 3 terabyte hard drive, which is like 3,000 gigabytes, and buy it for like $100. And so that's very clear deflation, in the sense that you can buy a lot more computer memory for even less dollars. But I think it's even occurring for not just like uh, technology type consumer goods, but it's also kind of been occurring for a lot of basic consumer goods. Like, I wrote a report earlier this year called "Your Wealth Is Melting," where I looked back at, how much food could one farmer produce to feed a certain people. And back in like the year 1900, one farmer was producing enough food in the United States to feed 4 people. Now one farmer today produces enough food to feed like 150 people, or more. And so in a way, that's kind of technology deflation, because the farmer now today has a lot more technology, a lot more tools, and a lot more resources to basically create a lot more food for a lot more people. And I think that's kind of been occurring for uh, you know pretty much every industry. Some industries at much slower rates, like real estate might be an example, where yes, we're getting a lot more efficient and productive at building houses compared to the year 1900, but it's still one of the most semi-scarce assets in the world. So the price of real estate can keep going up, where the price of data storage on a hard drive might be able to keep going down, both in dollar terms. But in reality, we've gotten actually a lot more productive at producing both of them over the last 100 plus years. So that's kind of how I think of technology deflation.
Yeah, that makes sense. And then it just kind of boils down to scarcity is one of the ultimate indicators of price, right? Because the data storage that can be produced abundantly and then over time even more efficiently, the prices are getting driven down naturally versus a good like real estate where it's semi-scarce, like you said. You can continue to build up, or you can kind of expand the land in various ways, but it's still relatively scarce, and so its price is going to be much higher than something like data storage or Kraft mac and cheese. You put out a video recently kind of debunking a common Bitcoin FUD, and I want to hear you elaborate on this a little bit. The FUD that people say is, I don't own Bitcoin because it has no cash flows. Why is this a flawed perspective?
Yeah, it's a really good question, and it's probably one of the main reasons why I was initially very skeptical of Bitcoin. Like I kind of like grew up like in college or whatever, looking at stocks and recognizing like, oh, I buy Coca-Cola here because it's a profitable company. It'll pay me a 3% yield every year. The stock price will go up over time. Like this makes sense. I would want to buy this. Why would I want to buy a digital rock that's not productive at all and never can pay me a yield? And then I realized I had to take a step back and be like, well, what exactly is money? Like, yes, Coca Cola is paying me a yield because they're successfully generating cash flow. But you could look at Coca Cola and something like Venezuelan bolivars and be like, oh my gosh, their cash flow is growing tremendously. Like it's exploding, it's going through the roof. They're producing so many Venezuelan bolivars. I need to sell my bolivars and buy Coca Cola, which is exactly what the rational thing to do if you're evaluating everything with Venezuelan bolivars as your money. But then when you look at Bitcoin and you recognize, wait, Bitcoin is just money. Like that's all it is. It's a scarce tool. It's a portable tool. It's a divisible tool. It's a fungible tool, and it has these unique monetary properties. And society throughout history has converged on tools like Bitcoin to be money, and Bitcoin objectively has the best monetary properties. And when you think about that and you realize, wait, Bitcoin is just money, and then you start measuring Coca-Cola's cash flows and dividends in terms of Bitcoin, you start to see that, wait, Coca-Cola and Venezuelan bolivars may be going up very rapidly. And even in US dollars, which are like, it's semi-scarce money, it's not perfectly scarce money. Bitcoin or then Coca-Cola still looks like a good investment. But then when you look at Coca-Cola in terms of Bitcoins and you realize like, oh my gosh, like in 2015, Coca-Cola was paying me, 5 Bitcoins per year in dividends per one share that I owned. And now it's paying me 0.0005 Bitcoin per share that I own per year. And you're like, wow, like the cash flows in real money and the best money are actually deep, going down over time. And then once you realize that Bitcoin is just the best money, and a lot of the investments that people are making today are like their cash flows are shrinking, then it doesn't make any sense to allocate to these investments at the current valuation, right? Like if I could buy the entire company Coca-Cola for zero point 0.1 Bitcoin, and I knew over the next year it was going to spin me off 100 Bitcoin in dividends, then that actually might be a good idea. Like that would be a crazy low valuation for Coca-Cola today, obviously, and the price would have to collapse a lot, but that would actually make sense. But at today's valuations, where everyone in the world is using the dollar as their unit of account, and they know they can't just hold dollars. They know they also can't just hold long duration bonds that are denominated in dollars. So they have to start chasing yield and buying all of these securities or financial assets that generate real cash flow at crazy high valuations. Then it makes sense to how we got to these crazy high valuations. But if you have the opportunity cost of just holding Bitcoin instead of buying Coca-Cola or holding dollars, then you recognize that, wait, like I can literally just hold Bitcoin. These companies are super overvalued right now, understandably so, because that's just, how the system has worked. But now that Bitcoin exists, you can just hold Bitcoin, at least until valuations come down very significantly. So that's kind of my view. Like cash flow is good, but if you sign a piece of paper that says I'll give you $1 a day for the next 10 days, and I buy that piece of paper for $100 and I only get back $10, like that's a terrible deal. That's
Mhm.
basically what's happening in Bitcoin terms. And just people don't recognize that Bitcoin is the best money, and people don't recognize the world is actually converging on Bitcoin as money right now.
It was really well said. And I honestly haven't heard it framed like that. I think the root of this misconception is people are simply stuck on this idea of using the dollar as their unit of account for everything. And I think that making the comparison to the Venezuelan bolivar is a really good way to frame this, because if you do look at their cash flows in terms of bolivars, I'm sure it's growing every year. It's like, oh yeah, I'm getting more bolivars. But then understanding you can look at it through bolivars and you're like, well, what if we look at it through Bitcoin? It's like, all right, they're not giving you nearly as much Bitcoin. And then also the actual stock price in Bitcoin terms is going down as well. So the
Yep.
initial capital you put in is going down in Bitcoin terms, and the future cash flows are going down in Bitcoin terms. So it's just a double whammy. And yeah, it ultimately boils down to people not understanding Bitcoin is just money itself. They're always repricing things in terms of dollars. So speaking of pricing things in terms of dollars, gold is making new all-time highs, and so is actually S&P and Nasdaq and some of these other major indices. Is this a good sign for Bitcoin going forward? And what do you think is holding back Bitcoin from not being at new all-time highs right now?
Yeah, it's a great question. I mean, when I think about Bitcoin and gold, I think about gold as kind of the base case for Bitcoin, where you have gold at maybe now at a 15 or even almost maybe at this point might be like a $20 trillion asset. Where if you add up all of the gold in the world, that's estimated to be what it's worth. And I think that's kind of like the base or even bear case for Bitcoin. Gold's hitting new all-time highs is interesting. I think that a lot of the like world today, especially people that have, older people that have significant amounts of money, or governments or central banks that may actually still be buying gold, they respect gold and like gold's monetary history a lot more than they currently respect Bitcoin and Bitcoin's monetary history. So to me, it kind of does make sense how like gold in the short term might still be doing very well, and a lot of capital might be flowing into buying physical gold or gold via an ETF or whatnot. But I do think it's a very positive sign for Bitcoin. I think it's a sign that people are looking for kind of an escape valve. They're looking for other optionality to allocate capital to, and because they're like the S&P 500 is super overvalued. They see that the United States is in a rough physical condition, and there's no desire for austerity of actually like trimming down the budget deficit, and whether it's Trump or Kamala, they're both going to spend trillions of dollars that the United States doesn't have. And so they know that over a long enough time horizon, there's going to be more and more, not panic, but potentially panic, but exiting of dollars and T-bills, and especially long duration government debt, which is, government debt or T-bills specifically is kind of the best form of money today, or the best form of dollar money. And so people are obviously trying to find another form of money. And I think, Bitcoin obviously is best suited to be that. Why has Bitcoin not hit new all-time highs since earlier this year? I think a lot of like short-term price action in Bitcoin is really pure randomness, or very hard to nail it down. One, like earlier this year, we obviously had the ETF approval. That was a major catalyst for billions of additional new dollars to flow into Bitcoin. And so that kind of, on a cycle or a time horizon or a cycle perspective, like that kind of bumped up the cycle. We made a new all-time high before the 2024 halving, which is something that's never happened before in Bitcoin's history. Didn't happen before the 2012 halving, 2016 halving, or 2020 halving. And so that's kind of interesting. Like we had an aggressive semi minor bull market really fast before the halving. And maybe Bitcoin's just kind of taking a little breath, like it sometimes does throughout history. And sooner rather than later, maybe it'll go on another massive parabolic bull run. And I think that that's probably going to happen. It's just a matter of time.
Yeah, I think, and myself included, a lot of people, it's so easy to just forget or just lose perspective of time, right? Because if you zoom out 1 year, Bitcoin's up like 150%. Year to date, it's up 40%. 2 years, it's up over 200%. Like Bitcoin is objectively in a bull market. It's been performing extremely well, but just having a 6-month consolidation around 60K, it can make you forget all of the gains we've already made. And you brought up a great point too, that we did hit all-time highs before the halving, something that's never happened before. And I think a lot of people, their base case was that we wouldn't see Bitcoin over 60, 70,000 until probably Q4 of this year, which we're not even there yet, right? And so we're definitely kind of on a premature scale. I would this cycle, and I'd say that ETF most certainly helped with that. And I'm looking forward to what's going to happen over the next probably 12 months. I do think we'll probably get that next leg up. And back in the 2020 cycle, as soon as we broke the previous all-time high of 20,000 in Q4, then it was off to the races. I kind of expect a similar story this time around, especially given the rate cuts and then given what we're seeing from other assets. Clearly, investors are looking for an alternative from treasuries and dollars. And they've gone to gold, they've gone to stocks, and I think they'll definitely find their way into Bitcoin. Plus, we're seeing more hodling from the long-term holders, right? When the ETFs were launched and Bitcoin started to rip, we did see some of those coins that have been held for a year, 2 years, 5 years start to sell into the market, which makes sense. If you bought Bitcoin in 2015 at a couple $100 and it's at 60,000, like I'd probably be selling some too to upgrade your lifestyle or whatever. And so we saw that kind of new supply, or revived supply, I should say, hit the market. But now we're seeing hodlers hodl again, right? I think, at the last time I checked, I think it was like 65% of the coins haven't moved in at least a year now. And so that's really good to see that kind of supply constraint coupled with, this increasing dollar liquidity that's happening over the next 12 months with these rate cuts. What are your thoughts on the BlackRock spot Bitcoin ETF? I know that got approved recently and should be live trading any day now. Do you think this is bullish for Bitcoin, or could you see like paper Bitcoin price manipulation games being played with this? What are your overall thoughts?
Yeah, the BlackRock spot Bitcoin ETF
The options.
Yep.
Yeah.
It's interesting. I don't think it's gonna matter too much. I don't foresee this suppressing the price or playing paper manipulation games with it. What I my one key takeaway, I guess, that I would have is it kind of enables in a way like roundabout leverage on Bitcoin, right? Like when you buy a call option, like this is why like so many young people like kind of just gambling on call options for as their like way of betting and having fun kind of. It's because like they can go up really fast. Like if you buy a GameStop call option or whatever, and GameStop soars, like you can make 100x or something like that. And so it's kind of like a roundabout way to get leverage on Bitcoin without having a like liquidation price. Like the worst you can lose if you buy a call option is the amount you put in, but you can get a lot of leverage. Like if you say like, oh, okay, I want to buy a call option on IBIT. I want to buy the right to buy IBIT at $40 per share. I'm not even sure what IBIT's at right now. Let's just say 30.
I have no idea. I don't check
fair.
the ETFs. I track spot Bitcoin.
Yeah, likewise. But say it's at 30 and you buy a call option that says the right to buy IBIT at $40 per share. Maybe someone sells you that for very little, and then all of a sudden IBIT goes above $40 per share and goes to 50 or whatnot. You can make a massive return by buying the call option. So it kind of enables people to go leverage long Bitcoin and like leverage long pressure on the price of Bitcoin, and like Bitcoin substitutes like ETFs could be good for Bitcoin. It's basically like it's going on BitMEX and being like, I want to go 10x long Bitcoin. And now you effectively place a buy order that's 10x larger than you would have if you bought it on Coinbase or Kraken or whatnot, or from Unchained or from Blockware as well. Obviously, the con to any sort of leverage is you can get wiped out. So you have to be very careful. And with the call options, it would just expire worthless. You're not going to lose more than you put in, but it might just expire worthless. So that's kind of the only thing that I can really think of, at least at the moment, when it comes to options. And it could be, you have a ton of retail people betting on, IBIT going up or any sort of Bitcoin ETF, and that creates a lot of buying pressure that's kind of leveraged if the price of Bitcoin really starts running, and then maybe it could just push Bitcoin a lot higher than it should be, like in the short to medium term. So I think it's bullish, but I don't think it's like the going to do anything super crazy.
Yeah, I tend to agree. I actually think this is going to be more of an institutional product because retail has already had different ways to get leverage on Bitcoin.
Yeah.
I think this will be helpful for institutions that are scared of Bitcoin's volatility, right? This will allow them, they can sell covered calls on their Bitcoin ETF, or they can buy puts to hedge themselves to the downside. So I think this is just another tool in the toolkit for institutional investors. And it's overall, we're just slowly but surely seeing more of infrastructure be built around Bitcoin, which ultimately I think supports the asset, gives it more kind of clout or credibility amongst the traditional financial institutions, which will ultimately long term lead to more capital getting put into the ecosystem. So I think it's bullish, but I don't think it's going to be like how in January when the spot ETF was
Yeah.
approved and we just saw the price rip. I don't think options being approved is going to have that same effect.
Agreed.
So why is another kind of basic Bitcoin or FUD debunk, which you're really good at? I think it's one of your best skills. Why is Bitcoin's volatility a feature, not a bug?
Yeah, it's a good question. I have a thread pinned on my Twitter profile that I wrote back in 2019, kind of on this exact topic. The way I've always thought about it is the bear markets are treacherous. They're brutal. People are literally buying this Bitcoin thing that a lot of people that hold it, and at least when they initially buy it, they don't fully understand what they own, and they're kind of uncertain about it, and they watch this asset fall 80% or more in this deep dark bear market that lasts for 12 months, 24 months, or even longer potentially. That's extremely brutal. And by the time Bitcoin has fallen 80% over a significant amount of time, people that didn't really get what they held, or they held it with too much leverage, or they were scared, they sold it. Like by the time an asset has fallen 80%, a lot of the weak hands have been wiped out, whether it's people, like I said, that don't understand it, they were too over leveraged, or for whatever reason, they're kind of wiped out of the market. And then at the bottom, when it's down 80% from its all-time high, who's actually buying Bitcoin at that point? It's like it's not going to be the degenerate gamblers that are going leverage long Bitcoin because it keeps going up. It's going to be people that really understand what Bitcoin is. They see a lot of value in it despite the recent price crash. They see that Bitcoin itself actually hasn't really even changed, and they see that, okay, well, it's down 80%, but like it was just up like 1,000% like the last 3 years before, a few years before that. And so it's like the parabolic bull run almost inevitably would lead to a massive wipeout, but obviously the wipeout is still significantly higher than it would have been before the massive parabolic bull run. And so I think the bear markets drive out a lot of the weak hands and the people that don't really understand Bitcoin, and it does it in a very aggressive, fast way. And then the bull markets, when the number is going up and Bitcoin is going up in an exponential manner, that's when people are like, oh my gosh, like I don't know what this is. I've heard people talking about it. I need to learn more about it. They listen to a podcast. They listen to Michael Saylor. They're like, oh my gosh, like this might actually be digital gold. Wait, actually, this might be the best money that humans have ever discovered. I need an allocation to it. And then you also have other people that, like, as the price starts rising, they're like, oh my gosh, like I need to go leverage long. Like this thing just keeps going up, and then it goes to a completely unsustainable level in a very short period of time, and then it crashes back down. And so like the bear markets drive out the weak hands. The bull markets, bring companies that are in the space. It helps them raise money. It increases their profits. Exchanges get built out. Custodial solutions get built out. A bunch of stuff like that. And so like the bull markets kind of help build the network effects and make Bitcoin more powerful and help the world understand and grab attention to what Bitcoin is. And because I think effectively almost everyone learns about Bitcoin because the number is going up, and then that's kind of like marketing for Bitcoin. And so yeah, I think that like that's exactly how adoption has happened, and I don't really necessarily see it stopping anytime soon. I think we'll probably have like another massive parabolic bull market, and then we'll also probably have like a pretty significant drawdown after.
Yeah, I think it was well said. And Bitcoin's so interesting because it really is this one-way tunnel, right? I have yet to meet someone that really understands Bitcoin, the long-term thesis of government debt and currency devaluation that becomes a long-term Bitcoin bull and then goes back, right? Other assets, people may be bullish on them and their sentiment changes, it ebbs and flows, right? But Bitcoin's such a one-way street. Once you learn about Bitcoin, you're in. And like you said, these massive bull markets, that's the best marketing Bitcoin could have ultimately, because people pay attention when the price goes up, right? And so once they're paying attention, then they go down the rabbit hole. And that's why you see just new waves of adoption every 4 years. And then on the inverse of that, you said it well, the bear markets play an important role in the cycle too, because you wash out the leverage, you wash out the weak hands. You can't reasonably expect 1,000x like we've had in certain cycles and not for it to come back down to earth at some point. So it all almost works too well, right? It's like clockwork. But at the same time, everybody knows about these cycles, but tends to the sentiment just changes, right? When you're in the bear market, we know, hey, Bitcoin goes through these cycles, but a lot of people who are unconvicted about Bitcoin, they're still grinding their teeth, thinking it's over. Oh, Bitcoin's dead now. It's at 16,000. It was at 60,000, but it always comes roaring back with a vengeance every single time.
Yep. Yeah, you made a pretty interesting point looking back to 2022. It's like if we didn't have that dark bear market, which was brutal, FTX might still be around. And like, what was FTX doing? They were borrowing against client deposits of Bitcoin and effectively selling the Bitcoin and buying altcoins and garbage and crypto venture and stuff like that. And so like, if the bull market or the bear market wasn't that dark and wasn't that deep, FTX may still exist, and there may be a lot of capital misallocation and straight up fraud in the industry. So it's almost good that you have wipeouts to clean out the fraud, the scams, and the bad things. And that's kind of how markets work. It's brutal reality of how markets and systems function, but it's also healthy to have these natural wipeouts.
Yeah. It's funny because looking back, you and I actually recorded a podcast at the very bottom when FTX was going down. And we said the same thing, that the FTX blow up was good for Bitcoin. And at the time, that could have been interpreted as cope, like, oh, these guys' bags are down. They're just trying to see the silver lining. But in hindsight, it was spot on. That did end up marking the bottom. And clearly, we are better off, or the Bitcoin's price is better off, I should say, since FTX imploded, because we've been basically up only since then with a few periods of consolidation. What are your thoughts on the recent conversation between Saylor and Saifedean about Bitcoin yield? And if I understand kind of Saylor's point correctly, he thinks it could be possible for like a bank to be run honestly that lends to only qualified creditors and they reliably generate a BTC yield for their depositors, sort of like a really trusted large financial institution may be able to pull this off, contrary to something like a BlockFi or an FTX or a Gemini, these less sophisticated institutions that have blown up with Bitcoin yield products. Do you think this is possible? And what's your overall thoughts on this idea of Bitcoin yield?
Yeah, it was a very interesting conversation. I feel like it's good for the Bitcoin community to have these types of conversations and for us to have debate and try to figure out, how this is all going to play out. Obviously, I don't think there's any substitute for self custody. I think like that's kind of the best way if you want to ensure that you're going to actually be able to hold Bitcoin for generations. There's no better way to do that than by doing self custody or collaborative custody with Unchained specifically. But it is interesting. I think both could be right, just on different time frames. Like I think Saylor's perspective is interesting in the sense that maybe it's possible that one day JP Morgan will be able to custody Bitcoin. And maybe just because of how the banking system works, they'll be able to quote unquote borrow against the Bitcoin, not actually move the Bitcoin. They still hold the Bitcoin. And then because they're a bank, they borrow against it, which is basically just issuing, their own credit, their own dollars, buying something like T-bills, earning the yield and paying the yield back in Bitcoin or dollars, but over like a very short time frame. But I don't know if that's how the banking system would work, and I don't know if like there's probably a lot of stipulations like SAB, whatever number thing that
It's
they're working on.
121.
Yeah. That probably has to go through another number of other things has to go through. The banking system actually has to, go about doing that. And then I don't know if that's actually what Saylor is envisioning when it comes to generating Bitcoin yield. If he's talking about like, you deposit Bitcoin at JP Morgan, and then JP Morgan actually directly lends out the Bitcoin itself and doesn't like create dollar credit buy and lend out the dollar credit on top of the Bitcoin, then I think that lending out the Bitcoin itself, it would probably be extremely risky for even JP Morgan. Obviously, BlockFi, Celsius, and all of those other yield platforms ended up horrible. Like they took an absurd amount of risk. Who that and it's like, who actually is going to borrow Bitcoin? Like, I was thinking about this the other day. It's like no one really logically wants to borrow Bitcoin. One is super volatile, especially like right. I'm talking like right now while we're still kind of in the hyper Bitcoinization phase. One,
Mhm.
it's super volatile. Um, and so why would you want to borrow Bitcoin? Unless you have like some sort of Bitcoin denominated liability, which no one really has right now. Super volatile, and it's yeah, so like I guess I couldn't come up with a good reason why you want to borrow Bitcoin. The only potential reason would be like you want to short Bitcoin, so you want to borrow it and then pay, give it back later at a lower price, which kind of makes sense. But I think there's better ways to go about shorting Bitcoin than directly borrowing physical Bitcoin. And so I just see that market being very small unless there's some other like USD way that the banks would generate the yield. It's obviously something that I've thought about for a little bit, but need to spend more time thinking about and want to
Mhm.
listen to what other people are saying about it. And then like very long term, when it comes to like on a Bitcoin standard, if the dollar doesn't exist, which I think is like the way that Safety was looking about it, then I do kind of think that fractional reserve banking and Bitcoin are like kind of incompatible. Like Eric Yates has talked about this, to where if banks did do something like this and there was a mismatch in their liability, assets and liabilities, which is exactly what kind of fractional reserve banking is, where people deposit Bitcoin and they think they have the optionality to remove it 24/7, 365, like a normal bank, but then the bank lends out the Bitcoin for long durations, like a year or 30 years in the case of a mortgage. Then there's
Mhm.
a mismatch. Like, if someone goes to withdraw, there's actually not enough Bitcoin. They have to sell the loans that they've made, and those loans might not be liquid. So that would cause a lot of problems. And effectively, that you would just have a bank run really fast, and there would be no lender of last resort. So you'd never get the money back. And so that's kind of, I agree with Safedin's point on that, where it's like it would just be completely unsustainable. Maybe Sailor's perspective, like I said, is kind of like there's this intermediary ground where you can somehow play like fiat games, and that might exist for like a decade or two. But I don't even know if that would really work, and I don't really know if that would be. I don't think that would be sustainable in a very long time horizon, anyways. So it's interesting to think about. I'm definitely curious to hear more people talk about it over the coming weeks.
Yeah, it was cool to kind of see them disagree. I mean, there's so much just universal agreement amongst Bitcoin maximalists. So I think it was nice to get a little tension, a little friction there on this idea. And ultimately, I think Bitcoin just eliminates this desire and chase for yield at all, right? Because the yield is the increase in purchasing power of simply holding Bitcoin. So realistically, a 0% nominal Bitcoin yield is still a positive real yield, because your
Yep.
Bitcoin's going to be able to go further in terms of the actual goods and services you can buy. My last question, and Joe, not to glaze you too much, but I think you're one of the smartest young guys I've met personally in my career. And I want your opinion and kind of give some advice to someone who may be, 16, 17, 18, about to enter the workforce, because I know you studied computer science in college, and sort of with AI rapidly advancing, do you think it would be worth it for a young person to go and do the same thing and study that? Or, what's your overall career advice to someone who's just now entering sort of the working years of their life?
Yeah, I appreciate that, Mitch. Yeah, it's a good question, and I think that the world is evolving and technology is accelerating so fast that we're not even going to really be able to imagine what the world is in like in 20 years, when someone that's 16 may be like approaching the peak of their career at age like 36 or closing in on 40. And so to think that any individual person has a good idea of like what the world will look like in 20 years and what would be a good career choice, it's kind of like a foolish bet. I will say that like AI is pretty insane. Like when I first started using Chat GPT, I was like, my mind was definitely blown. It's like one of the coolest technology products that I've used remember using in years. Like the iPhone was pretty cool. Google is pretty cool. Like app stores are kind of cool. Obviously, Bitcoin is very cool. But like this ChatGPT thing is very, very interesting. And then like using it to write code, or like using Cursor, which is like an IDE that deeply